Thank you to everyone that's just joined. We'll get started in the next 5 minutes, just giving everyone a bit of time to join. Salam to everyone that's just joined, just giving everyone a few more minutes before we get started. So bear with us and we'll get started at about 5 or 6, 7 minutes past 6. When you are admitted into the room are being kept on mute for obvious reasons. Obviously, we want to be able to walk you through a short presentation and then we will have a Q&A session at the end, which will give everybody the opportunity to either write out a question in the chat function, which we will be monitoring, or unmute yourself and ask a question as well. So yeah, we are also recording the webinar as well. This is just for the sake of being able to distribute and share it following today's event as well. So without further ado, let's get started. Thank you all very much for joining. Really appreciate you taking out the time. And today we will be running you through an introduction to yielders. So who are we? Yielders is the first FCA regulated Islamic fintech in the UK. We provide real estate investment opportunities to everybody from as little as £100, simplifying earning competitive returns from UK real estate. We've lowered the barriers to entry to a traditionally inaccessible asset class. So when I say inaccessible, I mean from the perspective of you need a large deposit, you generally have to go find a mortgage or some leverage of some sort. And then obviously all the difficulties of owning and managing a property that we actually deal with for you. We've made investing into real estate accessible. From as little as £100, you can own a share in a piece of real estate which is producing income. Simple, with the effective and use of our award-winning platform. So everything is very technology-based, hence the term fintech, which is what we classify ourselves in terms of our industry. And assured, 100% equity-backed, asset-backed real estate investment opportunities. These are Sharia certified structures. So at the very beginning of the business, we had a Sharia audit done and continue to do so on an annual basis based on just providing that rubber stamp, if you will. We're quite lucky to be dual regulated both by the Financial Conduct Authority over here in the UK and the Sharia certification, which we have in place as well. We have investors from all over the world now. I think that's now actually changed to over 25 different countries, all over the Middle East, Southeast Asia, across Europe, and of course, a number of investors within the UK as well. And generally, we provide competitive returns, so minimum of 5% net return per annum. And we try to hit the 8% net per annum, inclusive of capital growth on an annualized basis. So that very much is a snapshot of yielders. We like to try and define ourselves as a one-stop shop for real estate investment, completely equity-based, no leverage, no banks or any traditional financial instrument whatsoever is involved in our offering. So what you are investing in is a truly stripped back halal product, which is easy to understand because I think everyone seems to get real estate. A little bit about our journey then, who we are and where we've come from. So the business actually was founded late 2015. 2016, we did a beta release of the platform. So this was getting to market as quickly as possible. We created a secondary market, which is actually a phenomenal piece of the platform, which I'll go on to a little bit later. And we also did our regulatory submission in 2016. This was a very strenuous process. It took the best part of 18 months to 2 years. In 2017, we became directly authorized by the FCA, which is, if you know anything about financial services, pretty much the gold standard that's looked at throughout the world in terms of financial services regulation. And at the same time, we also achieved our Sharia certification. It was a fantastic year for us, 2017. We were presented with an award from the King of Dubai. We became the Islamic Economy Award winners for money and finance for that year for our efforts in the Islamic fintech space. 2018, we did a pre-Series A funding round, so some funding to help the growth of the business. We were able to develop and effectively own our own technology from that point onwards. And pre-Brexit, we decided to take regulation in a couple of European jurisdictions, just in case there was any difficulties trying to transact following the Brexit scenario, which obviously occurred last year. 2019, another fantastic year of growth from us. So we did a Series A funding round on Cedars, which was fully funded and overfunded. We scaled up the technology, scaled up the team, which was fantastic, and did a complete overhaul of the platform from a secondary market perspective. Into 2020, we had obviously had a lot of plans for last year, as I believe most people probably did. Alhamdulillah, we were then struck with a global pandemic, something that I think we'll be able to tell grandchildren about one day. We spent a lot of time last year doing a lot of work on technology, enhancing the technology, and effectively allowing us to enter the realms of different technological aspects in the fintech world. Some key headline figures along the bottom. We've got over 7,000 users now. We have had 5 of our investments that have reached the entire investment term. Just over £10 million of assets under management. So these are assets owned within our structures. A fantastic reinvestment rate of 72%. So generally speaking, because the initial investment is £100, we have a lot of people that will come and trial, invest in one of our products, £100, understand the mechanics of it. And generally, we have most people coming back to reinvest with us. Average achieved returns to date is a 4.3% net yield per annum, ever since the beginning of Yielders in late 2015, and an 8% overall net return has been provided to investors. And we've got currently 19 active investment opportunities, which are mostly sold out, but there are a couple available on the platform as we speak. So now, why would you choose to invest? This question comes up a lot, and we speak to people about this on an almost daily basis. Investing is integral to be able to grow your wealth exponentially, but also from a perspective of passive. Most people have a job or own a business, so a lot of their time is taken towards earning money. What we are trying to promote is allowing people to earn an income passively. So not spending your time to earn income, allowing your money to effectively work for you. Now, we noticed very early on, and the predominant reason for creating Yielders was actually frustration. The frustration of being a young Muslim in this country, and not having an investment opportunity that was suitable to our needs, our beliefs, and our ethos. Effectively, something that is away from a traditionally interest-based society that we grow up in and that we live in. So really, the business was born, very similar to a lot of people in this country, alhamdulillah, earning a decent amount from all the hard work that we've put in, but not having a way to exponentially grow or passively grow your income. So passive income for us is probably the most pertinent reason to investing with us. You're able to earn an income on a piece of real estate which you own for doing absolutely nothing. It's very similar to an interest-based savings product, because you get returns paid on a monthly basis, but it's not provided to you by interest. It's provided you by owning a tangible asset, which is paying you an income based on the rental income that we are collecting and distributing on investors' behalf. So it's a fantastic way for you to be able to leave a lump sum of money in one of our asset structures for a 3 to 5 year period and earn a passive income through this throughout. A lot of Muslims in this country have current accounts. We don't have savings accounts because, fear of the interest-bearing nature of them. So actually, there's probably huge sums of money. And we actually did a calculation once, I think, based on our research and thought process, there was over £2 billion worth of money in Muslims' accounts, either under the bed, under the pillows, wherever people decide to stash money, that just goes untapped and is not put into use. So huge sums of money that you could be earning income for, but actually people from a safety perspective decided to leave funds in current accounts and just leave it sitting there. And unfortunately, with inflation, your money is actually worth less than it would have been on an annualized basis. Inflation actually reduces the value of money when more money is printed and the basket of goods in this country increases in price. It's a way for you to be able to grow your wealth, not only from a real estate perspective, but there are other investment opportunities out there. Aside from the working and saving that everybody obviously does, this is a way for you to tangibly grow wealth, grow generational wealth, and actually pass that wealth on to younger generations and ensure that there is, a bloodline of wealth flowing through. A lot of us, especially from the South Asian community in the UK, are first, second generation, roots have been laid. And really it's the opportunity now to take this to another stage. It's a very similar analogy that we use for food. I think a lot of the older generation, when they first came to the UK, there was very little halal food opportunities. And now, alhamdulillah, we're inundated with the opportunity to eat in fancy restaurants all over the country and have real solid halal food supply available to us. Similarly, I think finance and Islamic finance needs to follow a very similar path, and I think Yielders has allowed for that to happen. So, inshallah, going forward, and there's already started to be, since we started, a number of other Islamic finance or fintech companies that have come to fruition, and long may it continue. The opportunity, and one day we hope to be sat here and having a conversation about a number of different Islamic finance options that people can tap into and grow their wealth and sustain with. Another fantastic opportunity that comes, especially with our sort of investment opportunities, compounding your returns. So everything is held and managed via this platform that we've created. The Yielders platform may from the front end just look like a website, but there's a lot that you can do with it. And Murrow will be speaking to the specifics around the technology as we step through this presentation. But effectively compounding your returns using the money that you earn from the rental income from us and reinvesting that. It's a fantastic way for you to continuously earn rental income and earn solid returns and continue to grow your wealth with us. If you keep what you're designated to keep with us on the platform and you decide to continue to reinvest that over a period of 5, 10, 15 years, you're going to continuously grow your wealth, inshallah, in a way that's going to be able to benefit not yourself, but future generations, as we've already spoken about. I think the reason that we decided to go down the real estate angle in terms of the investment vehicle and the asset structure was it's very simple for people to understand. People understand the concept of buy-to-let landlordship. People understand the concept of purchasing assets and capital appreciation in real estate. So it was a very simple, easy to use asset class that we were able to allow to open up the doors for people to invest in, lower those barriers to entry, which I've already discussed. A minimum of £100 investment with us, you can become a shareholder in a piece of income generating real estate. It really is a fantastic opportunity. The different types of investors that we have. So we have, you may have noticed if you've already signed up to the platform, if you've not, you go through an onboarding process, which we've tried to streamline and make as easy to use and understand as possible. But there is a self-declaration on there for you to identify what sort of investor you are. Are you an everyday investor who's looking to invest anywhere between £100 to £10,000? You're not hugely investment savvy. You may not have had any investment opportunities before, but we have democratized that for you. We've now given you the opportunity to be involved in an investment opportunity that you previously may not have had the opportunity to. So this will allow you to have access to all of the retail deals on our platform. You'll be able to invest as little as £100 or a maximum of £10,000, maybe some more if we have a conversation with you. These generally tend to yield anywhere between 4 to 6% net per annum and are paid monthly. On a monthly basis, you will get an email to say, right, you've had rental income paid to you. We have paid, alhamdulillah, dividends on the first of every month for 63 months in a row and counting. A fantastic feat that we're able to have achieved using the technology and the fantastic team that we have at Yielders. We've not missed a single dividend payment to any of our investors for just over 5 years. We then have two other investment classes. The sophisticated investor and high net worth investor. These are investing from a ticket size of anywhere between 25,000, and really with a high net worth investor, there is no upper limit. We will give these types of investors a little bit of a different aspect of yielders. You will have to complete a top yielder application, which is some additional questions in and around your ability, your understanding of investment opportunities, your risk criteria, what you're looking for. We're able to provide bespoke investment opportunities to these types of investment groups. Returns for development projects anywhere between 10 to 20%, and pre-funding, which is a concept I will walk you through slightly later in this presentation. But effectively, we're able to tailor any sort of real estate investment opportunity to our sophisticated and high net worth investors. So if you have slightly more wealth and you're looking for a more tailored approach to real estate investing, please don't hesitate to get in contact, and we can sort of put you through the top yielder process and get you started on more bespoke, tailored investment opportunities that may come. Eventually, everything does make it onto the platform. So everyday retail investors, don't be afraid. There's plenty of opportunities on there for retail investors investing into the opportunities that we have available online. Now, how does all of this work? I'm sure you're all extremely interested to try and understand how we get from owning a property to you be able to have shares in that. So as you can see on your screen, we have some very strict criteria and thresholds. So we are inundated with real estate opportunities on a daily basis. We've got a pretty stringent governance process whereby each of the assets is put through a financial modeling process. We have a number of questions and queries that we speak to landlords about. What are the covenants of the lease agreement? Who is the underlying tenant? These sorts of questions, and we compile an investment committee pack. It is then taken to investment committee, and a decision is made whether we will acquire and progress with this or whether we're not. So if it matches target thresholds, if the lease agreements are ironclad with strong covenants, so we avoid any void periods, we will then begin the process of creating SPV structures. Now, SPV stands for Special Purpose Vehicle. This is nothing more than a limited company which we open. Each of the assets we acquire is owned within a limited company structure. These limited companies are governed by two key legal documents. So we spent a number of months, close to a year prior to creating Yielders, of drafting all the correct legal documents to ensure ownership and all of the relevant details are captured within these two documents. The information memorandum, which is effectively like a business plan. It shows you exactly what the asset is worth, what we bought it for, a complete breakdown of expectations of this throughout the entire investment term, what the returns are, the number of shares, all of the information you could ever want to imagine from an investment opportunity we provide. And then the articles of association, which are the governance of the limited company, which tells us, if there's going to be a fire, what we have to do. If Yielders is not going to be around tomorrow, the SPV will continue to be governed by these two documents. So your investments are very secure and risk is mitigated against. We then, at point number 3, have a network of high net worth individuals and sophisticated investors that I've just walked you through. And these people are effectively our bank. So they are our anchor investors. We use funds that they have confirmed that they're ready to deploy with us. And we go out and we purchase the assets which have been signed off by the investment committee. So anyone that is able to come on as a high net worth individual, they become a top yielder. We use their funds to go out and acquire assets, effectively our bank in inverted commas. When we've purchased the asset, we've obviously done all of the research and due diligence beforehand. All of the rental agreements are currently in place. So point 4, when the asset is acquired, it is already an income generating asset. So what will happen, the high net worth individuals will get paid all of the first month's rent because they are the owner. We will list it on the asset at point number 5. So this is a pre-packaged asset which is owned in our SPV structures. It's already producing an income. And at that point, we place it onto the platform and allow retail everyday investors to start coming purchasing shares in smaller denominations from £100 onward. And really, that is it from your perspective. Once you become a shareholder, you will receive all of the relevant information, a share certificate to say the number of shares that you own. And then from there on out, all you have to keep aware of is on a monthly basis, you'll get an email to say, right, you've got rental income. You can either choose to rent that, reinvest that rental income. You can take that rental income out and go on holiday if you've earned enough money from it. Whatever you decide to do, you are in complete control of your investment opportunity, whether you want to reinvest in multiple properties or whether you just want to keep it to one investment with us. It's entirely up to you. You will also obviously be informed throughout the life cycle of the investment term with us. If anything was to go wrong, if there was to be a leaky tap or a boiler might break down, we obviously handle all of the management of that and relay that information back to you. So it's an information passing exercise. You are the landlord in inverted commas, but you don't have to deal with any tenants ringing you up at 4 a.m. to say they've got a pool of water in their front room. So really taking away the difficulties of buy-to-let landlordship and just providing you, our investors, with the easiest part, which is potentially counting plenty of cash on a monthly basis. I'm going to hand over to Marwan now, who's just going to walk you through the platform and give you a little bit more detail in and around that.
Welcome everyone. Can you hear me?
Yes, loud and clear.
Okay, excellent. Thank you, Zishan, for the introduction and walking us through the slides. So I think Zishan already touched upon this earlier, saying that it's more than just a website. Yes, from the front end, it looks like a simple website, but really in reality, it's offering you the whole end-to-end experience. And what that means is we've automated our onboarding. So some of you have already if you are already an investor with us, you've obviously gone through the process of onboarding with us. You've also signed up, you've made investments through our platform. So you can make your investments, you can do reinvestments, so sell on the secondary market. Some of you have already also gone through that process. Your online account is secure, so we've got 2FA enabled. You've also got your My Portfolio page to give you a full breakdown of your investments, your dividend payments, and your shareholdings, including looking at all of your share certificates, which we'll see onto the next slide in the video. You can access the website anywhere in the world, and most recently we've actually automated our pre-funding service, which Zishan will be touching upon a bit later. So the pre-funding service, which is offered to the top yielders, is actually quite a complex piece of work that has now been automated and ready for pre-funders to make their investments through the platform. And finally, you can access also your profile, where you can change your different your details and also download any transaction history, etc. Okay, so just the next slide, please, Z. Thank you. So this is just a quick demo on how to, if you're already an owner, if you've already onboarded with us, then you simply have to just log in. You can access all of the properties that are currently open on the platform. We've currently got Flat 4, the Freight Building, which is open for investment. And essentially it's literally at a click of a button. So these are the two documents which Zishan discussed earlier, which is the Articles of Association and the Information Memorandum, which you must download in order to make your investment. So these are just demos. Once you've entered the amount that you invest, so if it's under £1,000, there's no stamp duty. However, £1,000 and above incurs a 0.5% stamp duty. And that's everything. So you've got the number of shares that you purchase and your final amount that you will be paying. And that's it, really. Essentially, your investment has been registered. So just on this point, if you were to scroll down, there is a very valuable investment calculator, which actually displays all of your returns over the period of the investment term. It's not in that video, but if you go on the website and you check it, you will see the investment calculator, which is actually really valuable. This is the My Portfolio page, which gives you all of your portfolio value, your investments, your dividends that have been made. And here you can actually submit to relist your shares as well if you wanted to exit your platform earlier. This is your My Portfolio page. You can set up a direct debit, you can add funds, withdraw funds, you can download your transaction history, or change your self-certification. As Zishan mentioned earlier, the 3 different types of investors that you have on a platform, you can still do that through here, or also submit an application to become a top yielder. And that was just a brief video just to demo our website. Thank you.
Fantastic. Thank you so much, Marwa. I just want to quickly go back to a point here that we showed you. So within obviously your portfolio, which Marwa outlined to us, you have a complete overview of all of the pertinent things that we think that you would want to see when investing with us, what the total value of your entire portfolio is, what you have invested in at the moment, what you've earned up until now, and it really is a way to be able to very simply, like how we decided to design the platform in terms of everything going towards technology. You've got your banking apps, all of the information that you'd want to see. We've tried to follow a very similar view and understanding, just to be able to show people that it's very simple to become an investor with us, as well as understanding how you will grow your wealth and look at all of the key metrics that you might want to look at. Yeah, it's
and I guess just adding to that, Zishan, obviously technology doesn't end there. So there's constant improvements that we are continuing to make, including, our investors have asked us to basically provide an aggregate view of all of the dividends, for instance, made within a single month. So that's what we're working on at the moment. So there's constant improvements that are going into the platform. And if you are an investor with us, you must have noticed these changes happen probably fortnightly at the moment.
Yeah, and that's just testament to our fantastic technology team, which Mara's ahead of. We've come leaps and bounds. If you'd have seen the original skeleton structure that we went live with back in 2016, the platform, alhamdulillah, has come a long way, and huge amounts of functionality changes that we're able to do. And those 63 dividend payments that I mentioned that we've done in a row, a click of a button and thousands of payments are distributed to all of our investors on a monthly basis. So it is a really key piece of technology which allows us to be able to do what we do. In terms of then our pledge, what we offer you investors when they do decide to invest with us, an ethically minded investment opportunity in real estate in the UK, which is fully authorized by the FCA, but also Sharia certified. So that dual regulation is extremely important to us. Assets which are free from debt, leverage, or any sort of financial instrument whatsoever. Rental income, which is paid as a dividend to your e-wallet on the first day of every single month. Fingers crossed we continue to be able to do so without fail. No hidden fees or charges. So one other element that we didn't touch upon when walking you through the investment process, we produce a financial summary, a profit and loss of each of our assets. So you know exactly all of the costs associated with acquiring the asset, where we make fees, how much the asset is going to produce an income over the period of time, what the projected returns are when we decide to sell the asset. All of this is provided over to you to allow you to make an informed decision for yourselves about the investment opportunity with us. So, transparency is a complete part of what we do, only offering net returns. So you know exactly what you're due to receive, rather than trying to, blind people with these fantastic gross returns, which are just not achievable. We decided to do everything completely opposite to traditional finance, strip everything back, provide all of the information as in a transparent manner, effectively.
I'll just add to that point as well, Zishan. Sure. So the investment calculator that I touched upon earlier has actually got all net value. So essentially what you see is what you get. We do not conceal or hide any of the fees that we have. Also the Knowledge Center, clearly, if you go on our website and go to the Knowledge Center, you'll find our fee structure, which is again quite clearly laid out. Again, it's on the homepage as well.
Thank you. We offer you a diversified selection of properties. We've got real estate all over the country, prime London, all the way to the Midlands, up north in Manchester, and as far up as the Northwest, Middlesbrough, So really a wide variety of real estate all across the country. And then a fantastic team who are able to clearly communicate and provide all of the information you may need. We're available across all social channels: Facebook, LinkedIn, Twitter, and Instagram, as well as a very well manned instant chat that we've got on the platform as well. And of course, if all else fails, our email addresses and phone numbers, everyone is extremely attentive and will be able to answer as many questions as you may be able to come up with. Now, in terms of what you can see on your screen now are two of our investment opportunities which made it through an entire life cycle with us. So the first one I'm going to walk you through on the left-hand side is the very first investment opportunity that we had, which was in Gravesend, just east, I believe, of London in Kent. We had originally projected a 39% return for this 3-year investment term. So that was 3 years made up of 5.8% net return in terms of rental income, and then 15 to 20% uplift in capital appreciation. We purchased this asset below market value in an area where we saw growth. So we did a very conservative, as we do with everything, projection on the capital growth. And it was a 39.96 net return that we'd advertised. This is our first ever asset, a 3-year term. We actually achieved a 55% return over the 3-year period. So as you can see by the graphic over here, we projected a continuous return of 5%. However, throughout the 3 years, there was a void period at one point. We managed to achieve more rent than we'd originally projected. And as you can see, there was a roundabout changes throughout the investment term with us. This has changed somewhat, over the few years that we've now been a business. We tend to only look at full repair and insure leases with tier 1 covenants now, rather than managing agents placing private tenants for us to avoid any void periods. And then you can actually see the increase of the capital appreciation. Rather than the 23% that we'd originally projected, we were able to achieve a 35% capital appreciation on the original amount. So a very, very fantastic opportunity. If you'd invested with us, you would have made 55% in a 3-year period, which, if you can find me a financial product that produces that much income over a 3-year period for me doing nothing, let me know, because I would like to invest into it as well. So that was a fantastic opportunity. Obviously, unfortunately, now is sold, so we don't own that anymore. But it was just a view of what we've been able to achieve previously. And now on to an investment opportunity that we had in Milton Keynes. Now, what you can see on your screen is a negative return. Not to alarm you or anything, but this is what we presented to investors. At the end of a 3-year term, we had an asset in Milton Keynes that, as you can see, had achieved above projected net income on a monthly basis until the final year, where we had a void period and it was producing no income. At the end of each of the investment terms, we revalue our assets before we sell them, so you know what they are worth. Similar in this situation, when we revalued it, we realized that there was a much larger increase than we'd anticipated, so everybody was better off. Now, the flexibility in what we're able to offer here, when we had the asset valued, it was lower than what we had purchased it for. Now, this happened because we were trying to dispose of this asset in the middle of last year, which was a global pandemic. So no one really knew what was happening in the real estate market. It was very, very difficult to understand and ascertain. Now, rather than trying to sell an asset in a depreciative macroeconomic condition, we have the flexibility to say to investors, we're not going to sell it right now. Hold on to your shares for another year. We will have another tenant placed into the property to allow you to continue to return. So actually what this doesn't show is, after this period, the rental income went back up to the projected level because we found a new tenant, rather than trying to sell and issue a loss to our investors, which would have been a 2.64% loss to our investors. What we actually were able to achieve is another year's worth of rental income, wait for the macroeconomic conditions in the country to recover, and then look to sell the asset in a market where it is, you know, now, given there is a stamp duty holiday, rather buoyant. So we will be trying to sell this asset in July this year when it comes up to the end of its tenancy. But this is just giving you an indication. You know, people were due to lose money on this if we would have executed a sale, but rather than crystallizing losses for people, what we decided to do was allow them to earn more income for another year, wait for the market to recover, and actually dispose of the asset in more favorable conditions. Now, this is fantastic opportunity because we're able to guard against and mitigate against macroeconomical conditions and risks that we may face that we're not in control of. You know, 3 years ago in October 2017, when we acquired this asset, fantastic outlook. You know, we were going to make a substantial amount of money on this one as well. But as you can know, you know, anything can happen. Who knew we would have been subject to a global pandemic and lockdown for the past year? Very interesting times, I believe, for everybody. But, you know, this gives us that flexibility. We're able to ensure that people will continue to earn rather than traditional financial institutions where if you face a loss, you face a loss. There really isn't anything that anyone can do about it. So these are just two examples of asset structures that we got. Two very good ones, I think. One where it shows us in all of our shining armor and doing fantastic things, but also the flexibility that we're able to offer investors should things go wrong. Because, you know, as with everything, and you'll see this with everything that we do, all of our website, any email comms that we have with everybody have got risk warnings all over. You know, nothing is guaranteed. We're not allowed to guarantee returns. It would be unethical. It wouldn't be halal if we did that. So we have risk warnings over everything because anything can happen. That is the ultimate element of what we're offering here. So that is just two indications of some fantastic opportunities that we've had previously. Now, just quickly want to touch upon pre-funding for any high net worths that may have joined the call. So pre-funding, what we've described it as, is a very liquid savings account. So you're able to park anywhere, anything above £30,000 and above. We say 50,000, but you know, we do accept based on people's conditions. Anywhere above £30,000, we will give you first access and first approval on investment committee approved assets. So the moment that something is approved, you will have a view to that. You will be able to hold 100% of your equity. So given an example, say for example, an investment committee approved asset is £200,000. We've got one high net worth who is looking to invest £100,000. He will own 50% of that property. He will get paid 50% of the rental income. And then when we list it on the platform, you will get paid however much investors invest. That capital is paid back to you. Now, before you list it on the platform, you could tell us that you want to own 25% of your shares for the entire investment term. So if it's a 5-year term, you can hold on to 5 years. You will then get paid back £75,000 of your original £100,000. You will have that paid back to you. The £25,000 will be stayed invested in the asset, and you will earn throughout the life cycle and the investment opportunity, and then get paid back that capital and any appreciation at the end of the investment term. So it's a way for people that have got large sums of money stuck in a bank account, not making or earning any income, to incrementally earn income on a monthly basis, dividends paid to your e-wallet, and it gives you the opportunity to cycle your large amounts of capital into a number of different geographically located investment opportunities, which actually lowers your risk. It diversifies your portfolio, and you know, you can say you own shares in multiple properties across multiple jurisdictions across the UK, and then get multiple emails on a monthly basis to say you've got rental income across a number of your assets. And you'll also be joining a like-minded community of top yielders who help us grow and diversify our business as we go on. That is actually it in terms of the presentation for this evening. Thank you very much all for your attentiveness. I'm sure you're bored of hearing me talk, but appreciate your time. We have had a number of a number of questions that have come through on the chat, so I'm just going to walk through those. Feel free to continue to ask us questions in there. Myself, Marwan, I think, and a couple of our team members are on the line as well, so they'll be able to help us out. So the first question I can see, what happens at the end of the investment term? So our investment terms are anywhere between 3 to 5 years. 3 or 4 months prior to the end of the investment term, we will revalue the asset because then we'll understand if the projected capital appreciation has happened or not. If it is, we provide all of that information to investors and say we are going to try and sell the asset on the open market for this price. All of the investors, because you are the shareholders, make a decision, you vote for us to do so. We will then go and try to sell the asset on the open market for as much as we possibly can to be able to then distribute those returns. If the asset is sold, all of that money comes back into the platform and then is distributed back out to all the investors. So you get your original capital back plus any capital appreciation which has been achieved throughout that period. If, however, in the Milton Keynes example, we're not able to achieve a value that we believe is providing the sort of returns we want to our investors, we will hold the asset. Again, a vote will be sent to all of the investors for you to make the decision. You are the principal shareholders, so you make the decision as to whether or not we hold that asset, apply another lease term for it for another year, like we've done with Milton Keynes, and then try and sell the asset in more favorable macroeconomic conditions. The next question, would this presentation be able to watch or share later? Yes, as I said, we've recorded it and we will be distributing it with an email confirmation at the end. And investors get his initial investment back. Yes, obviously, as I've mentioned, at the end of the investment term, your capital is paid back to you, and then anything that we've managed to achieve in terms of capital appreciation. Realistically, how much can I make if I invest £100 a month for, say, 3 years? Putting me on the spot there a little bit with my mental maths abilities, but compounding is a fantastic way for you. So if you're happy to invest continuously £100 every month, it's only going to benefit. Obviously, the more you invest, the larger the returns are. As I've said, we offer a minimum of a 5% net return per annum. So 5% on £100 isn't a lot of money. But obviously, the more that you invest, so if it's £10,000, if £1,000, you get £50 back. £100 would get you a £5 investment return on £100. And so on and so forth. But again,
I guess just to cover on that point, hence the reason why the investment calculator is really, really handy. Each asset has its own projected returns, so we couldn't really tell how much you would earn over a period of time, over the investment period. So if you want to check out the investment calculator and just work out your returns from there, that will probably be your best option.
Very simple to use. It's got a sliding scale to say, right, if I invest £5,000 or I invest £100,000, it will then automatically calculate what your returns are for that asset over the period of time. The next question, is all the financial due diligence done in-house? Yes, as I mentioned, the investment committee over the years, we've refined the process in terms of the due diligence that we conduct. We've got models that align to the thresholds that we've set out for ourselves. And all of that due diligence is done beforehand, before we even decide to make a move on a property. Does Yielders acquire a given asset outright or hold a percentage stake? We personally don't invest our money. It is high net worth and top yielder investors that purchase the assets and are the shareholders ultimately. And they are able to hold a maximum of 25% of their overall shareholding for the entire life cycle of the investment term. The rest is released to retail investors on the platform. You refer to rental income for the investors, but I assume that returns will be in the form of dividends, given that the investment is limited. Correct. Exactly that. So it is rental income because we are collecting all of that income from the asset. But you're right, it's distributed to each individual as a dividend because it's coming from a limited company. Exactly. Is there any way to protect or limit the amount of tax we end up paying on the return? Example, ISA accounts. It is something that we have spoken about and we are looking to work. Unfortunately, there isn't a purely equity-based ISA available. It's something that we have had conversations with HMRC with, and it's something that we, inshallah, will be able to bring to the market one day. The most tax efficient way is to actually invest via a limited company yourself. So we have the ability to allow you to create a profile using a limited company. If you were to invest via a limited company, because the asset structures are within limited company themselves, Once we tax them, because we do tax them, corporation tax, we take an accrual for, because it's a net return that we provide, your dividend will not get taxed again in your limited company for profit. Your personal tax circumstance is dependent on how you draw that down as a dividend. However, the profit that you take in back into your limited company will not be corporation taxed again, because it has already been taxed via our entity that we've created.
Plus, there's also a £2,000 threshold on accepting dividends without any having to pay any tax, which means you'd have to invest around the £50,000 mark before you're actually liable for tax on dividends.
Yeah, obviously dependent on your personal tax circumstances as well. You may be getting dividends from a number of different, but there is a £2,000 tax-free allowance on dividends. Next question, does investing in yielders class the investor as a homeowner? Because if someone does not own a property and would like to own one down the line and take advantage of government schemes, first-time buyers, etc., no, you are not classified. It does not classify you as a homeowner, nor does it spoil your first-time buyer status. You are purchasing shares in a limited company, which an asset is bought within. So you are owner of shares, not the entire property, so it doesn't affect your first-time buyer status. How easy is it to sell my shares portfolio? This is testament to our secondary market is extremely liquid. I don't think we've ever had an asset on our secondary market that's not sold out within the month. So we have very stringent month-end processes. So all of the transactions are ended and started on the last day of the month. So yeah, a very, very liquid secondary market, alhamdulillah, which is only testament to our investor base, really. Anything that gets put on there, we don't even tend to market it, and it is sold out within the month. What do yielders charge, or is it built into the framework? It is built into the framework, but just a quick overview on that. We charge 2.5% on top of any acquisition. So if the asset we decide to acquire is £100,000, we list it on the platform for £102,000, 500. You will see a breakdown of our fee within the profit and loss document that I've already spoken about. We take a 10% management fee on all of the rental income. So that's deducted at source. Again, you're provided the net figure, so we've already taken our fees out. And we do a 15% profit share on exit. So if there is a capital appreciation, we will take a 15% share of the profit, not of your capital. So you will always have all of your capital returned to you, but we'll take a 15% profit share on any appreciative amount that has been achieved. They're the three fees that we have associated with our projects. There are a couple of other fees. So there's a fee that we take that we don't take, but it is for our e-wallet provider. But again, it's all outlined in the profit and loss, so you can see where all of the elements are. Allah Mubarak, great service to the Ummah as you grow, members keep principles. Thank you very much for your kind comments. Just to touch upon that, we are Sharia based rather than being a Sharia certified company or Sharia compliant. We've not taken complex traditional financial structures and legally made them halal. We've very much from the very foundations of the business created something to be Sharia based on three very simple core Islamic principles: sharing in risk and reward, which is what you do with us as an investor. You know, if something goes up, everybody wins. If something goes down, everybody loses. There is that equal share of risk and reward. Investment into an asset class which is not volatile in nature. So if you look at the traditional growth element of real estate in this country over the last 30 years, there has generally been a positive upwards trajectory of real estate. It's not like stocks and shares or crypto that some of you may be involved in, which show, you know, volatility, ridiculous amounts on an almost daily basis. This is a very secure bricks and mortar investment to avoid gharar effectively. And the final point is no interest or riba associated with anything. So I've already explained to you that away from any financial or traditional banking products whatsoever, there's no interest bearing on anything that we do. Under what scenario would you sell the asset? Is it yielder's decision to say to do so, or would the investors have a say in that? The only scenario we have are defined, predefined in the information memorandum. So all of the investment terms have set terms to them. If for whatever reason we get an offer for an asset off market and it's producing more return than we'd expected in the middle of investment term, we will table that to investors and you will make a decision. The voting structure we have in place is because ultimately you are the owners of these properties, not us. So you are the decision-making force behind that. We will table a scenario to you. We will say Yielder's recommendation is to do X, Y, and Z. It is then your decision to vote against that. So when we make our decision process of what we're going to ask you to vote on, it's always to maximize profits and with the interest of all of our investors at heart. So we will table something. It will be to make sure that we maximize your profits. It's then your decision as investors to decide if you would like to go with that or against that. Do you include commercial properties in your portfolio, or is it purely residential? We look at both commercial and residential. The Gravesend example I gave you at the beginning was a split residential commercial. And we're always on the lookout for different opportunities. Obviously, if they fall within the due diligence and they are halal, so we won't do any alcohol related products, tobacco related products, anything like that in our commercial lets. Not sure if I missed this, but does the share of the high net worth share dilute once offered onto general investors? Exactly. That's precisely what's happening. The share is, I wouldn't call it a dilution. It's people are purchasing the shares. So you are reducing the number of shares that you own as a high net worth. And that is being transferred to all of the retail investors who are coming on board and purchasing said shares. What are the risks involved in pre-funding opportunities? As with everything, we've tried to mitigate these risks as much as possible. So really, if we've decided to purchase an asset, is because we know that it's got a strong tenancy associated with it. We know that it's a decent market value, if not below market value. We've done the research. All of the information is there. We only present investment opportunities once the research and the due diligence has become. So we're presenting you with a very de-risked investment opportunity. I suppose one of the risks are if we're not able to sell it to the retail investors on the platform, you may have to wait slightly longer for your capital to be paid back to you, but you're still earning income on that in terms of the rental income until it's paid back to you. So yeah, I think we've mitigated the risks as much as we can in relation to any of our offerings. Join later. Can we watch this later on? Yes, we will be circulating again over email. What's the difference between 4.3% and 8% return in your slides? So the 4.3% is purely the achieved rental income. The 8% relates to an average of the capital appreciation since we started as well. So for example, with that Gravesend asset, a 55% net return over 3 years over the period of time that we've been a business, so coming up to 6 years now, averages out to that 8% net return that we've provided you. What's your current pipeline of deals like? Fantastic, it really is. We've got a fantastic opportunity in Leeds coming available, inshallah, within the next 6 to 8 weeks, I would say. Actually, our problem at this moment is not deal flow, it's being able to fund the deal flow. We've got loads of opportunities. We just need to increase our user base and have more people interacting with us to be able to provide more deals. The quicker that we're able to sell out of deals that you have on the platform, the quicker we're able to recycle high net worth funds and add more to the platform. It works in quite a cyclical way. And one is quite dependent on the other. So the more that we're able to grow, and the likes of these webinars and all of the other marketing that we do is in order to be able to grow and provide as many deals to the pipeline. So we, as a top yield or a high net worth individual, you get an access to our pipeline view. So we have a minimum of 3 to 4 properties on a monthly basis that we will be looking to acquire. What we're actually able to acquire is obviously dependent on the level of liquidity we have available at any time. How does it work with pre-funding in terms of taxes? Exactly the same way, because you're still being paid as a dividend. So dependent on your personal tax circumstances, whether you declare that dividend or not is up to you and your accountant and your personal tax circumstances. When do you expect the new development projects to be available? We are in the process of completing 2 large-scale development projects up in by Teesside University. They are due for completion across the next 6 to 8 weeks. As soon as they're done, we will shift focus back on then to another development project, probably something not as large scale, because it's been an interesting journey with these ones, but we will be looking at providing some more development opportunities to our high net worth investors going forward. Please clarify stamp duty, e.g. non-residents have an additional 2% surcharge. Yep. So in relation to stamp duty, we pay the stamp duty when we're acquiring the asset. So that's bottomed out and makes up, so again, back to my example, if it's £100,000 property, we'll pay the additional 3% on that. So we'll pay £103,000, acquire the asset. You are only subjected to stamp duty if you invest over £1,000. If you invest over £1,000, there is a 0.05% stamp duty land charge for share transfers automatically added onto your investment. So when Marwa showed you the breakdown of the investment, how easy it was, it will automatically calculate. So you will see the amount of stamp duty that you are paying for the shares that you're purchasing. What would happen if we needed to withdraw the investment before maturity? I've already touched upon the secondary market. You effectively automatically create an online form via your profile to show that you want to sell your shares. We get that notification. We will list your shares on the secondary market, and people will then purchase those shares. Your capital will then be paid back to you at the end of the month, once during our month-end processes. Any requirement to open an account with a limited company? The requirements are available to you during the process, but basic things like proof of address, company incorporation certificate, proof of funds, these sorts of stuff. But the onboarding process is very straightforward, and you'll have all of the details available to you there. Is there international exposure in the pipeline for yielders? We already have investors from all over the world, alhamdulillah. The difficulty in taking yielders abroad is not having that knowledge that we do of the local real estate market. If we're able to find a partner somewhere internationally who is able to give us that information, then sure, why not? We would be able to offer international investment opportunities. It's just not something that we do at this moment in time. Do you have a pipeline of multiple investment opportunities coming this year, or is it too early to say? We do. We've got a pipeline available to us. I think there's about 3 or 4 properties in the pipeline at the moment that have all passed IC approval, and we're just doing the fundraising and legal processes for now. So it's going to, generally, it takes around about 6 to 8 weeks from the moment that we decide we're going to acquire an asset to actually having it live and available on the platform. How long is the investment locked in for? Each investment has its own investment term. They are generally 5-year terms, because that's about the right time to be able to realize any capital appreciation.
But just to highlight on that point is that you can liquidate your investment at any time, as long as it's not in the last 6 months before it's due to exit, and it's not during an asset that's still in flow, as in people are still buying shares in it. At these 2 points, the asset is still locked out for you from reselling on the secondary market. Otherwise, you're able to just resell it. And that's all automated via my portfolio page.
Thanks, Marwa. Company's house lists all shareholders for each SPV, which seems like a breach of confidentiality. Is there any way to keep my investment private? The easiest way to do that would be investing via a limited company. But yeah, I mean, it's the law. We are required to file confirmation statements on an annualized basis, which shows the shareholding. It's a law that we are governed by in this country. So appreciate the confidentiality point, but I mean, I guess people would have to be actively searching for our SPV names, which I doubt they know the name of, because we have naming conventions for them. They would then have to go on there and find information like that. But it is, it's publicly listed information. If you're a director or a shareholder of any business, that information is by law a requirement on Companies House. Can you provide more details on how foreigners can invest and tax deducting? Would you be able to guide us on how to pay declare taxes, any additional taxes for non-residents foreigners? Unfortunately, we're not able to provide that level of advice because of the different tax laws in all of the countries. We probably have our knowledge center would be completely backed up with just tax advice. All we say to investors that are coming for abroad, just take heed of your own local tax laws. You know, obviously investors from the Middle East and UAE, where there are no income taxes, they're able to invest tax-free. There are some indications if you're from the US about the tax implications and FATCA and everything we've got on our knowledge hub as well. But really, it is just dependent on your own personal tax circumstances in your own country. It is a dividend, so whatever your dividend tax allowance is, or, you know, in some cases, if there isn't an income tax per se. Why should high net worth pre-fund as opposed to wait for it to become generally available and just invest the 25% they would be entitled to when pre-funding? Good question. I think that the predominant reason is because they support us and what we're trying to do. You know, all of our high net worths, we have a very personal relationship with, investing over, you know, 30 to 50,000 pounds. You can see why. Aside from that, it's a very liquid way for people to invest and a very liquid way for you to be able to earn small returns, but very quickly. On a monthly basis, your entire holding will earn a return. Generally speaking, we tend to sell out of an asset within that month as well. So your capital will be repaid for you, and it allows you to diversify, earn small returns, rather than just having all of your funds sat in a bank account or all of your funds in a specific asset on the Yielders platform. This is allowing that diversification, de-risking that step further. And yeah, it's almost enjoyable owning several elements of different properties across the country. Our high net worths tend to quite like the pre-funding element. And now that it's all been bought online, it's actually a lot simpler and a lot easier to use and understand as well.
And just to add to that point, in terms of high net worths and pre-funding, you can actually retain your investment. So say, for instance, if you wanted to retain 25% of your investment and continue to earn rent on that, that's definitely possible as well. So you don't have to, if we've sold out in the first month and you still wanted to carry on, keep earning rent, you can definitely do that and still earn rent on your investment.
Yes. Do you have any opportunities to invest in property development projects? Yes, I mentioned we've got two that we're close to finalizing at the moment. And following that, I'd say probably towards the end of Q2, we'll be looking for another opportunity similar to that. Would there be capital gains on when we sell on the platform? When you sell on the platform, I'm assuming you're talking from a high net worth perspective. No, because you're selling for the price that you purchased at. The only capital gains is at the end of the investment term. If there has been appreciation, then yes, that's paid back and there is potentially capital gains due on that. Again, dependent on your personal tax circumstances. Is it better to invest smaller amount over a few investments or a large amount into just one investment, taking account of any fees? It's entirely up to you. What we've given you is the flexibility and the opportunity to invest as little or as much as you want and as many times as you want. I think from a financial perspective, a financial prudency perspective, and you know, this is not me offering financial advice. This is just having worked in the financial services industry for most of my career. Diversification is very good when looking at investment. You know, having smaller amounts in multiple de-risks things a little bit further for you, and also gives you, you know, different returns across different portfolios. So again, it's entirely up to you. We've given you that freedom to make that decision for yourself, how you would like to invest, how little and how many times you would like to invest. It's really given that thought process and engaging you as our investors for you to make those decisions for yourself. How are investments valued on the secondary market? So each of our assets, before we acquire them, has a RICS certified survey done to them, and we will conduct a secondary RICS survey when we are due to sell the asset on following the end of the investment term. What we say to people that want to list in the middle of an investment term, if you would like to have your own independent RICS survey to show the increased value, you're more than welcome to organize that, and we'll organize a site visit and everything like that. But our advice generally is list for the nominal value, the price that you paid at, because A, you will have your capital back returned quickly, and B, it does get slightly messy if you're trying to have your own valuation done. It becomes long and onerous, especially, you know, if you're trying to dilute your investment or have your capital returned back to you. Generally it is because you want it done quickly. So anything trying to have valuations done is only going to slow that process down. Is stamp duty reserve tax 0.5% paid by the sellers when putting their shares on the secondary market, or just by the buyers? Just by the buyers. So that 0.05% is a stamp duty land tax on share transfers. So that's paid by the buyers. That is the end of the questions so far. I'll leave it another minute or so if there are any more questions which have come in. Really appreciate everybody's time. I know I've probably bored your ear off rambling all this time. I hope it's been really informative. Please feel free to sign up to the platform. There is an open investment opportunity on there at the moment, which is close to 60% sold out, I think. Any questions, Jake's kindly just put all of the details in there. Team at Yielders. I'm new to investments. Is there any guide you could refer me to? Yes, if you come onto the platform, it's very simple. We've created it in a way to make life easy to understand. And there's also a knowledge center on there, which has got a whole host of questions. It's like a Q&A effectively. So any of the questions that I've answered on here are available there as well. It will allow you a bit more time to consume and understand the responses rather than listening to me drone on. I think that's it then. Thank you everybody for your time. This will be shared, available. Please, pushing you again, sign up, invest with us, spread the word. Really appreciate all of your time, and thank you, and hope to welcome you on our investment journey with us soon, inshallah. Thank you and take care.
Thank you very much, everyone. Assalamu alaikum.